My guest today on the spot is John Hathaway. He helps manage over $1 billion as part of the Tocqueville Gold Fund. He joins me on the line now. John, good to have you on Kitco News.
Thanks, Daniela.
John, you've been in the gold trade a long time, so let's make the case for gold today, which is struggling to hold the $1,300 level. What are your thoughts on the market? I had one guest on recently saying, look, even if we were to have a 50% correction in gold, it wouldn't be uncommon given the 12-year bull run. What are your thoughts on the market, John?
Well, I mean, to me, it's a strategic commitment, and to get too caught up in the day-to-day fluctuations is kind of it's a losing proposition. In the short run, it's probably been influenced by the headlines out of Ukraine. I mean, I can't think of anything more than that. But longer term, we know that the various central banks have expanded their balance sheets. That's nothing new to anybody who's listening to you or looks at your site. And as Paul Singer said in a very, very good letter that was published a couple of days ago, or at least it was circulated, this will not end well. And, I wish I could be better about timing. I'm just not, that's not my forte. But it seems to me that when you need insurance, when it's obvious that the house is on fire and you go to get it, it's not available. And right now, gold is on sale. Nobody cares about it. It's deeply out of favor. It's financial insurance. It's wealth insurance for all kinds of things that could happen, any of which seem to be more probable today than any time I can remember since I started doing this over 15 years ago. And gold is a way to protect against another 2008 kind of meltdown, which I think is a reasonable expectation.
John, when you say no one is really caring right now about gold, what would it take to get people interested again besides a rally or a spiral downwards?
Well, I think they'd probably have to start losing money in their conventional investments. So one of the headwinds that gold has faced over the last couple of years for sure is that the returns in the stock market have been pretty good, and that's also true in bonds. So when that stops, and it will stop at some point, gold is going to get more of a bid than it has right now.
John, let's look at the Tocqueville Gold Fund now, which has an interesting breakdown here. You have roughly 10% in physical gold, and the rest is spread out over the royalty mining companies. What's the reasoning behind the breakdown? And let's talk about the fund's performance this year.
Well, I mean, I don't feel great about the performance, but we're a sector fund, and there's not much I can do about what the sector does. Over a long period of time, we've made a lot of money for people, and I expect that to be the case going forward. The reason for the breakdown is that we think that having physical metal is a very realistic alternative to owning mining shares. Mining shares are riskier bets on the gold price, and they rise and fall with the gold price on a more leveraged basis. But the metal is kind of an anchor of value to the fund, and in difficult times, it has served us very well. I think if you look at our risk-adjusted returns compared to our competitors, they look pretty good, and I think having a gold component is part of that.
John, let's look at a topic that's been quite heated in the precious metals industry lately. It's regarding the London gold fix and whether it's manipulated. I know you have publicly made statements about that these investigations or allegations may actually hinder the gold market and that it may scare away institutional investors.
Well, I do think that the fix, which probably did work very well for many years, probably needs a complete overhaul. I don't know why gold couldn't oil doesn't get fixed. Most other commodities don't have a fix. Why should gold? So I kind of think at the very basic level, it's an archaic system that served its purpose, and it probably needs to be overhauled, if not removed altogether. It does serve the purposes of the bullion banks, and I think that's what the complaints filed by Quinn Emanuel and now many others are pointing to. I'm looking forward to having discovery. I'm looking forward to depositions if this goes forward, and I hope it does. because I think we'll all learn a lot about how the gold market really works. It's a very arcane process, how you connect the physical market to the synthetic market, which is what is created in London and to, I guess, a lesser extent in New York. But it's really, when you think about supply and demand, you can look at physical flows of the metal, and you just scratch your head and say, how can it be that the gold price is down? And I think the answer to that has been that there has been synthetic supply created, and that's enabled by, at least to my understanding, and I admit, that nobody really outside of the inner circles of this really understands how it works. But it seems to me that bullion banks get credits or lease gold from central banks, and they turn that into synthetic supply. And it's basically a carry trade, which is very, very profitable. And once you're doing that, you're essentially short gold. So it's not in your interest to see the gold price go up. I kind of think that the various legal actions will bring some of this to daylight, and I think at the end of the day it will make the gold market more comprehensible and seem like less of a rigged game to investors who right now are kind of saying, yeah, gold makes sense, but gee, it really looks like the cards are stacked against you.
So, John, in a nutshell, are you saying we just need more transparency in the gold market?
Yes, for sure. I mean, no markets are completely transparent, but on a scale of 1 to 10, the transparency in gold is 0.
John, however, the study did look at a period in the gold market which saw substantial changes. Right after 2004, we saw the emergence of gold ETFs. We saw investment demand ramp up. We saw gold prices rallying. And they also looked at the PM fix, which generally tends to have a lot more producer selling because it occurs at a time when the Americas are open, right? So these are all factors to take into account.
Yeah, for sure. I think there's a lot of discovery to be made. The ETF was certainly very effective in mobilizing investment demand, and for many years it was one of the wheels driving the upward thrust of the gold price, along with the headlines that went along with it. And the unwinding of the ETF in the last couple of years has probably accentuated the pressure on the downside. But I don't think that's a big deal. I think the ETF is terrific. I think it makes gold more accessible to institutional investors. So I think on balance, it's been a big plus for the gold market.
John, with the 1 minute we have left, I'd like to get your thoughts on the U.S. dollars. We have had Jim Rickards on, Jim Rogers on, all calling for the eventual demise of the U.S. dollar. Where do you stand on this?
Well, if you look at the DXY, which most people look at, it's at the low end of a trading range. And obviously, if it breaks down from here, it would be a very important signal to the markets, including gold. On the other hand, it's been at this level a couple times in the past few years, so it's rallied from these levels, and I'm not going to call it one way or the other, but I think it's something you really have to watch. What Rickards and Rogers are talking about, I think, are very accurate from a longer-term point of view, and a day doesn't go by that you don't see more trade doing outside of the dollar settlement basis. So the more that happens, I think ultimately the gold stature will rise. And
John, finally, besides gold, is there anything you're really liking right now?
Well, I'm pretty much constrained by my mandate, which is precious metals. So we own shares of gold mining companies, silver mining companies. It's a very difficult sector if you're not a specialist. And I think the reason we've done well is we have a strong research group. There are 4 analysts, and that's all we do. And we basically do a lot of due diligence to pick the best stocks. And I think that's why we succeeded.
John Hathaway, thank you so much for your thoughts today.
Thank you.
And thanks for watching this edition of On the Spot. Email us your comments or questions at newsfeedback@kitco.com. Thanks for watching.